Australia's tax system has developed over decades, in many cases through minor incremental changes, but in some cases through major holistic upheavals. The system is based on the collection of tax and the delivery of services, programs and transfers across three levels: local, state and federal. In terms of the tax mix, there is a significant reliance on income taxes, both individuals and enterprises, followed by the provision of goods and services, which together capture over 2/3 of taxes across all levels of government. This tax mix is reflective of an underlying tax policy of widening the tax base and meeting objectives of equity and efficiency. However, the mix is different to the OECD average, which has a much higher proportion of consumption taxes and includes other types of taxes such as social security contributions. Tax design is heavily influenced by economic policies, political ideals, social behaviours and ethical theories. It needs to consider a number of factors, both domestic facing and in the international context. For example, what transactions, flows or assets are taxable? Here, we need to consider the definitions of income, capital, as well as other taxable components. Taxes could be realised on financial streams such as wages, the transfer of goods and services, asset valuations, unrealised or realised gains on investments. Who is liable for the tax and at what rate? Here, we need to consider the source of the capital or income, as well as the residency of the taxpayer. We need to consider whether it is a direct or indirect tax. In addition, we need to consider various tax expenditures which limit the tax liability. How does the tax affect choices, intentions and behaviours of taxpayers? A neutral tax system will not affect choices by taxpayers, meaning that the relative returns, attractiveness or prices should remain constant regardless of tax design. However, this is not always the case. Consumption taxes encourage savings, leading to greater investment and generating economic growth. They can also be used to discourage undesirable behaviour or compensate for negative externalities. Income taxes discourage working and can discourage investments if returns are also taxed, meaning that taxpayers may be more inclined to spend rather than save. They can also influence where the taxpayer is located for tax purposes. Production taxes can discourage growth and contribute to substitution effects across labour, land and capital. This distorts behaviours that can result in economic inefficiencies. The type and size of government intervention to overcome market failures and imperfections is also relevant. A good example here is putting a price on carbon to account for environmental damage. How can we minimise tax avoidance and tax evasion? The wording of the legislation and any regulatory guidance needs to be clear and should lead to the intended interpretation by the judiciary. The tax design should be competitive with foreign jurisdictions to reduce the desire to shift tax benefits. There is also an ongoing need for technologies to administer and monitor taxpayer transactions and holdings. To recap, tax design and tax mix are the results of actions taking place over many decades. Australia's tax system revolves around three levels of government, with a current focus towards income taxes and consumption taxes. However, this may change over time as a range of domestic and international factors continue to influence Australia's tax design and tax mix.